We've got Anthony Heredia, who is the Managing Director and Chief Executive Officer of Mahindra Manulife Mutual Fund, joining us. Anthony, 24-karat magic is what I've been humming. I'm wondering whether you've been playing that song on loop as well.
Yeah, Alex, and I mean, to add more color to your comment, every 24-karat magic has a silver lining. Uh, and and to that extent, gold and silver, you called it correctly. I mean, it's recency bias. There are a couple of other things as well at play, right, Alex? There has been a lot of uncertainty in the market, currency, the India-US trade deal, the upcoming budget. I think that all led to the fact that active equity saw a reasonable lowering of interest compared to the fact that the last 3 months, 6 month, 12-month returns from gold and silver looked like magic. And that's where investors have flocked. But materially sense a change in mood in the last 6 or 7 days, as you've seen some correction in gold, but I think a lot more significant in silver. So I would fully, I don't think the trend will change, but I think what we've seen in January is probably the peak interest. Obviously, if gold and silver go crazy from here, it's a separate story. But the view we have is that probably multi-asset is a category that will continue to grow in strength, and that automatically includes some portion of gold and silver. But some of the euphoria, the recency bias that you saw in gold and silver ETF flows in the last month, I've seen that coming off very significantly post this correction we've seen in the last few days.
Right. So it was a lot to do with the momentum in the pricing. Anthony, hi, this is Nisha Poddar joining from the studio. Now, my one question, gold and silver, was it also the safe havens that they're called? Is that also a cautious approach in terms of diversification while we dealt with a lot of uncertainties? And also with the US trade certainty coming in, equity will now have the similar pull once again. How do you see this picture?
No, Nisha, that's exactly the point. Besides the India-US trade deal, I think another significant event is the outcome of the Japanese action. Potentially, therefore, a clear difference in terms of US bond yields, US currencies. So I think the story over the next 3 to 6 months will play out very differently from what we've seen, particularly in the last 6 months. And I think for sure, Indian equity that has gone through a fairly rough patch over the last 12 months, pretty much flattish returns. I think we'll see some sense of a comeback. Will it result in flows coming back in drives? I don't think so. I think it'll take some time. But like I said earlier in response to Alex's comment, I think we're at the cusp where there is going to be a shift. But the interesting point is multi-asset. The beauty is, I think a lot of our peers, including us, we've cut down on gold and silver positions in the last month as prices have gone up. And what's worked beautifully for this product is equities obviously have done very well in the first 7 or 8 days of this month, right? So multi-asset funds kind of seem like this magic solution. To your point on caution, honestly, anything that doubles or triples like gold and silver has, I don't think you can ascertain caution from that. It's almost like it's the risk asset one could, but perhaps our view would be what had to happen from a risk perspective on gold and silver has happened. It will now become one of these assets you hold your cautionary. And in an equity market sense, this is, in our view, not the time to be cautious.
Yes, now a lot of things have changed since the last Amphi data really came in, Anthony. But the fund flows do suggest that there has been a lower fund inflow when it comes to the small and mid caps, a usual classic scenario of caution where large caps have still seen momentum. Now, what is the outlook for SIPs and different categories of funds as you see the current moment for this month?
So, Nisha, again, I think recency bias, right? I mean, in the last 6 months, you've seen a clear outperformance of large caps relative to small and mid, and that's now starting to reflect in terms of flows. Now, obviously, SIP book being 31,000 crores, which is strong, means there's an input into small and mid caps, which continues to be strong. My sense is that at least percent of total SIP flows tend to come into a mix of small, mid, flexi, and multi cap. I think what you'll find is people choosing flexi cap, which they already seem to be doing in the last 2 months, and multi as a way to play their fund selection. I'm not predicting that large caps will gain in momentum. I'm not predicting that small and mid caps will continue to lose momentum. What I think will happen is flexi, multi cap, multi asset. I clearly see in the next 3 to 6 months, these will be the three categories of choice. And that number that Alex spoke about, which is 24,000 crores plus another 15 in other ETFs. So 40,000 crores in ETFs versus about 40,000 crores in all hybrid and equity put together is unusual. I believe there'll be a readjustment towards equity and hybrid in the 3 to 6 months, backed primarily by these three categories.
That's right. The fund flows also, Anthony, is very, very critical at this particular time. And while we are discussing the AMFI fund flows, we cannot not also touch upon the FII inflows bit. Now, with the US trade certainty, how are you seeing this particular momentum building when it comes to the foreign investors' outlook and also more comfort with equity? Because that is critical, while DIIs have really supported for the last many weeks when there was extreme uncertainty as well as weakness.
No, that's perfectly put. I have all long held the view that while we may celebrate SIP flows and DI strength, FI flows are a delta, right? The fact that we've remained flattish in spite of 12 months of consecutive outflows on FIs has been a challenge. I've also gone on record, frankly, and I'll say this on your channel again. I think FI flows coming back over the next 6 to 12 months is a question of when, it's not if. Right? And that when can be predicted by continued strength in corporate earnings because of the GST tax cuts and generally GDP growth being north of 7%, the US India trade deal creating certainty, currency stabilizing. So I would, and also the fact that a lot of people are kind of uncomfortable with certain valuations within the AI space, right? So I think India is almost like the antithesis to it. And you're starting to see, I think the data from FIs in the first 5 or 6 days also say the same story. So I think FI flows will come back, but I'm not going to be able to put a finger on whether they'll come back in the months of February and March or potentially June and July. My point is that's exactly what one should never do, right? Try to time it perfectly, saying, I will invest when FI start investing. My point is if you have a 3 and 5 year perspective, this is a time to invest. FIs, etc., those trends will come into your favor at some point in time. Timing has never made money.
Right. A lot of macros are looking much more comforting at this particular moment from what Jan really showed. So our AMFI data for the month of February will be very different, especially also incorporating the outlook that you gave. Anthony, always a pleasure to welcome you on NDTV Profit. Thanks so much for your expertise on your insights on the show. Thank you.
Thank you.